Hello and welcome to today's webinar, Two Birds, One Integration, Automated KYB and KYC. My name is Matt Johnson. I'm a Director of Product Marketing here at Socure for our compliance solutions, and I will be your moderator today. During the session, before we get started here, if you have any questions, please enter them in on the Q&A box. You'll find that on the side of your screen. And at the end of the presentation, we will answer as many of those questions as possible during a live Q&A. So feel free to ask questions throughout the webinar as they come up. As you have anything that comes to mind, we'll go ahead and we'll keep track of all of those and we'll ask them in the order that they're received. So be sure to enter those in. And if we do happen to run out of time and are unable to answer every question, we will be sure to follow up with you separately. So let's go ahead and get into today's speakers and introduce who will be speaking with us. I'm very pleased to welcome Debra Geister, our VP of Compliance Solutions here at Socure, who brings more than 2 decades of experience in the banking, compliance, and anti-money laundering industries. She's a recognized leader in the financial crime protection field and has worked with many of the largest financial institutions, as well as technology and data companies, both global and domestic, to help eliminate and reduce money laundering, fraud, and related financial risks. And I'd also like to welcome Dani DeLoen. Dani has been building foundational risk, compliance, and financial crimes programs into product experiences for close to a decade. Prior to Middesk, she was the founding member of risk operations at Stripe and held various risk and compliance leadership roles. And during her tenure, she led product initiatives in AML, KYC, and sanction screening and drove overall compliance strategy aimed at building delightful yet robust onboarding experiences for customers. So welcome both to Deb and Dani. So today we're going to be covering a variety of topics. First, we're going to be going into just some overviews and introduction and definition of UBO and a regulatory overview, where Deb's going to just sort of cover these topics and what we're hearing in the regulatory space right now. We'll also cover UBO processes, challenges, and best practices. And then we'll go into automated KYC and KYB, what to look for, best practices in solutions and solving for having a KYC and KYB. And then we'll also have a little bit on our partnership with Middesk and Socure, so you can understand how we work together to deliver KYC and KYB to you, and then time for our Q&A. So at this point, I'd like to welcome our first speaker, Debra Geister, with an introduction of UBO and our regulatory overview. Debra, the floor is yours.
Thank you, Matt. And thanks everybody for joining us. I think discussing how we handle ultimate beneficial ownership would not be complete without really talking about how do we define it and what are the challenges surrounding how we operationalize that right within our organizations. And if you look at the glossary of the Financial Action Task Force, FATF, those recommendations really refer to a natural person who ultimately owns or controls a customer, and or the natural person or on whose behalf a transaction is being conducted, right? The absolute here is that UBO is always a natural person, it's not a legal entity. Now that sounds pretty straightforward, but we know when it comes to organizations, corporations, and such types of complex structures are pretty typical, and we can get things like nested transactions. We can get layers of ownership where a corporation owns a corporation owns a corporation, right? So that's what makes it really challenging in the world of ultimate beneficial ownership, is because we have to have that natural person behind the scenes. Keep in mind that a business is not an entity on its own. Even though it's registered as a legal entity, it is a collection of individuals. So we have to get to those individuals behind the scenes. There's also, both in the US and internationally, around who ultimately owns or controls. So having effective control around an account or a relationship, and that is someone that may not have ownership stake per se, like a general manager, or somebody that is in control of the business should be defined as a control. And so even though they don't own any portion of the business necessarily, they still have to be collected from an ultimate beneficial ownership perspective. So that definition applies to a beneficial owner or a beneficiary under a life or other investment-linked insurance policies, right? So under FATF guidance, we've got to get to those natural persons behind the scenes. So therein lies the challenge. So let's talk about why we do this and what the role is. If we move to the next slide, Matt. I wanted to kind of lay out how we see financial crime play out and what the role is of things like synthetic and front and shell companies within the entire ecosystem. So when we look at how money moves in a financial crimes organization, they're very sophisticated, very well developed, and they operate much like transnational criminal or multinational corporations, right? So we have a tactical level, that's the revenue generation phase. We see different types of products, financial products that are used, and typically synthetic identities to be able to acquire those monetary gains. Then we move things up to the operational level, which is where we start to see front and shell companies come into play. So we see those synthetic entities that come into the entire ecosystem. They collect those monies that are generated at the tactical level, they roll them up to the operational level and usually aggregate them into accounts that start to take the shape of things like commercial account for a front or shell company. Then finally, we create more aggregation of the funds and we move them up to the ultimate strategic level, right, which is all those people pulling the strings behind the scenes with holding companies, NGOs, and offshore. So that's why this is really critical, is because those front and shell companies facilitate obfuscation of who's really behind the scenes. So why is this important? Why do we do this type of activity? It seems like it's painful, right? If we move to the next slide, the reality is that money laundering is something that is seen as the greatest human rights challenge of our time. This is not a faceless crime. It's not something that happens in isolation and nobody's getting hurt. The reality is that revenue generation phase that I talked about, that lower level of the pyramid, comes from things like human trafficking, child trafficking, drug trafficking, weapons, kidnapping for ransom, trafficking, corruption, bribery, all sorts of things where there are individuals who don't. So if you are on the front lines of anti-money laundering and you are involved in that, then thank you, because you are definitely somebody that we need in the fight, and it is very important that we all work together to get there. So let's talk a little bit about some of the challenges that are present. If we move to the next slide, I think that there are some things that we can identify to help put this into scope. The size of that revenue generation portion that we talked about is represented here based on the different illicit finance mechanisms that we see in global financial crime, right? So all the way from the left-hand side with corruption at $3.6 trillion in revenues generated, all the way to things like organ trafficking. So these are billions of dollars in enterprise activity that occurs. Money laundering needs to facilitate the generation of those funds, and so therefore our UBOs become critically important as those monies start to move. So hopefully that makes sense, that I've laid the groundwork as to why this is important, what is happening with some of these entities that we need to try and understand as we onboard them through our organizations, and how we can do that. So we move to the next slide, Matt. There is certainly, from a FinCEN perspective in the US specifically, there is a CDD rule. A lot of this activity falls under what we call the CD, or customer due diligence rule. That rule does not categorically require the collection of any particular customer due diligence information, other than that required to develop a customer risk profile. And so from your organization's perspective, what that looks is going to vary, but we definitely need to create that risk profile. We also need to conduct monitoring and collect that beneficial ownership information. And there is a standard I'll talk about in just a minute as to what the minimum is for collection of that, and also that control point that we discussed. The performance of media searches or any particular screenings is not required, but it's always a good idea to be able to identify those risks on the front end of the process, right? So as you're onboarding, there comes a point in time when you've accepted that customer, now there's additional things I can do. But really what we expect from a regulatory perspective, FinCEN's guidance is a 25% benchmark. So we're looking for anybody that owns 25% or more of an entity. In some cases, we see organizations that will do 10%. We have some that do all beneficial ownership. So it really varies based on risk profile. But the regulatory expectation is that you collect at least those that have a 25% share or greater. Again, that's an evaluation you'll have to do within your organizations. So how do we do that logistically? And one other thing I will mention here is, as we start looking at things like sanctions, we get into 50% rule. I'll talk about that in a minute, but there's all kinds of confusing issues here, right, that kind of coalesce and bring us a whole set of challenges. So next slide, please, Matt. Okay. I'm going to turn my camera off here just momentarily because I'm having bandwidth issues. Okay, so when we talk about some of the challenges that occur in this process, is like I said, it can be very confusing. We've got ownership information, we've got multiple ownership, we've got nested ownership, we've got all of these things that are going on. So there are also varying requirements across jurisdictions. While the US market has been pretty clear about collecting at least 25% ownership, there may be states that have some different guidelines. There may be different licensing authority that have some different guidelines. So based on where your organization sits in the ecosystem, you have to keep those in mind as you start to build out your onboarding for your KYB environments. Again, your definitions of UBO and verification can vary by regulation and jurisdiction and even by policy. So how much data do you have to collect? How much of it has to be verified? How do we define what verification is per policy? Those are questions you're going to have to answer in your compliance program, and make sure that you've got a clear delineation of how you mitigate and manage that risk and when you have to go further, right, in the enhanced due diligence side of things. There's also a sanctions application here, right? So when you do OFAC requirements, we also look at things like the 50% rule. So somebody that has a 50% ownership of a company, whether or not they're listed on an OFAC list, if the company is listed, it has to be sanctioned. So all of those compliance things crash together here, right, as we start talking about how we manage our overall risk. We also look at data, right? Lack of available, accurate, and structured data in some cases, depending on the jurisdiction, and making sure that you have the right way to verify those entities is always a challenge. And make sure that as you plan your programs, as you put these types of things in place, you've compensated for that, because it will require some manual intervention in most cases. Most ultimate beneficial ownership is really self-reported. So how reliable is the data is another key question. And that data structure is key. When you start talking about how you manage this as an organization, how you operationalize it, how do you those files together? I have an entity, I have ownership, I have a one-to-many relationship. How I link those records, how I combine them, and how I view them is going to be a critical component of how you build this process. And finally, from the customer side, this can be extremely inconvenient. I've worked with a number of commercial accounts who have tried to set up financial relationships, and it can take a lot of time, where from 60 to 120 days in some cases. It's manual and ineffective on the operation side. There's increased expense, and our timelines, as I said, are very challenging. So those are just some of the things that we have to keep in mind to be able to frame out what is the problem and what are some of the challenges we have to address as we start trying to operationalize the KYB process within our organizations. So I'm going to hand it off to Dani to talk about how do we overcome some of these and address those.
Awesome. Thank you so much, Debra, for setting us up with a regulatory background, introducing some of the different challenges that companies are facing today. So to kick this off and to build off of what we've discussed so far, I'll add that there are many different institutional obstacles and legacy technology that have made fulfilling these AML KYC requirements in commercial onboarding manually intensive and clunky. To illustrate this point, we can see the different perceptions of what this is like, both from the business standpoint, who is the customer that's going through the process? From their perspective, it's very much time consuming. See things of lack of transparency. What's going on? Lack of personalization. I'm a person on the other end of this business. How can I get through this process as quickly as possible? From a bank or an institution's perspective, implementing commercial onboarding, it's very much a case of how to keep up with the changing regulatory environment, how to think about the customer experience, the product experience, and making sure that things are not necessarily inefficient or costly, but you're thinking about building out that effective customer risk profile while getting through to an approved state. So with this stage in mind, many banks, fintechs, and other institutions are working on solving these challenges to speed up onboarding while maintaining compliance. This really sets us up for new expectations in business onboarding. So when you think about how long this has taken, I think Debra mentioned even up to 120 days. You think days to weeks to open up a new business account. when today the expectation is as close to instant as possible. In some cases, and I've definitely been in conversations with folks, like those minutes start to feel like weeks. And so what can you do to build your customer profile while doing so as quickly as possible? What complicates this is that the regulatory environment is constantly changing. Ultimate beneficial ownership is even more pertinent than ever, and businesses offering these types of financial products need to consider how to meet your requirements while creating that best customer profile and moving so as quickly as possible. That's why I'm excited to be here today to talk through what are some of the different ways that we can automate KYC and KYB. But before diving in there, I'll quickly touch on what's holding the industry back. What are some of those different challenges? And so the first thing that really comes to mind when I think about this is a lack of coverage. It really comes down to the data that you're using. If you reflect on that long time frame, data often is refreshed every 6 to 12 months. And so that leaves a large time gap where there are many businesses or entities being formed or updated in that interim period. So those won't be captured in any sort of automated onboarding. So think through the additional exception paths, the documents, the discussions that will need to happen in that interim timeframe. But I'll bring it down to something a little more real and have it be not as theoretical here for all of you, and talk about the Middesk experience. When Middesk was first incorporated, it took 9 months before Middesk showed up as an entity with certain solutions. In that intervening timeframe, every time that Middesk needed to set up a bank account or reach a financial service, there needed to be additional steps to get through the commercial onboarding process. And so this really lit a fire under us to say, what can we do to be better and to really enable those businesses to get through that onboarding process faster while making sure that the overall customer profile was filled in. So secondly, another area is really around data quality. And so data quality can mean a lot of different things. And I've certainly spent a lot of time talking through various data quality myself, but here I'm referring to what are the different records that you're getting back? Do they include things like false positives, false negatives, or even too many? What are the different things that are deteriorating trust in the response? Again, if you're thinking about automation, moving quickly through that process while building that business profile, you need to trust the responses you're getting back in order to automate on top of it. And last but not least, there are various legacy APIs and UIs. I won't get too much into the technical details here, but I think thinking about how heavy are the integrations, how costly is it, do you have multiple systems, is it clunky infrastructure? When you're thinking about speed and robustness, how quickly can you get through that process makes a pretty big difference to get to automation. We spent time talking about challenges, but now to move to a more optimistic outlook here, I will say that there are many innovative best-in-class KYC and KYB solutions out there that are designed to shorten and streamline that experience. And so what we're here to talk you through are what should you think about when making that decision? What are the different components to a great solution for each of you? Again, this will really vary depending on your overall customer risk profiles, how you're building your programs. And so here it's building on top of how do you get an understanding of who your customers are? So once that's in play, I'll start through 3 different sections I've laid out here on the slide. And I'll start with increased efficiency, which is very near and dear to me being in operations. To start, when I think about automated decisioning, this really comes down to increased efficiency, I really think about automated decisioning. This is really how you get to high quality matches and verification, but decrease those manual review. So there are a few different components to this. You get to the speed that I mentioned earlier, but also thinking through time savings that you have for your analyst teams. If you have consistent, clear, auditable results through automated processes, you're really only looking at things that maybe are the edge cases, and ideally very little, if any at all. This definitely is making your analysts happy, but I think as you're building out your programs, another component to this as well is what else goes into that? Thinking through change management, procedures, the actual running of the manual processes is something that you can think about when you move towards a more automated solution. How do you get there? So for me, when I think about automating decisioning, I really think about the data and the freshness of the data. So tactically, you're evaluating a solution. What do you ask? Ask about how often data is updated. How fresh is it? Because as I cited earlier with the Middesk experience, if you're able to get data on entities that have been incorporated, let's say yesterday, you can move more quickly through your processes while still continuing to build the robust picture of who your business customer is. So, speaking of customers, that leads us to the second area that I would encourage each of us to consider as well. And I would say that's increased conversion. And you'll bear with me here because this might be a bit of a cheesy comment to say, but I would say a great solution is one that's going to wow all your customers. And so I say wow your regulators and wow your customers with that frictionless onboarding experience. And so I think that, again, goes back to how do you capture and use the different data you have, building that business profile to meet your KYB and KYC requirements. And how do you get there? Earlier, I asked, what are some questions that you should ask? Here, I'm going to give you a few more pointers as well. Some things that I would consider are kind of what are the current and target conversion rates? Ask the different vendors what approval looks like for them. What does this look like across their customer base? What should they be aiming for? What should you be aiming for? And if you ask, why is this important? Earlier, we touched on some of the slides on what commercial entity onboarding looks like and how the expectation is really to get to instant. And so if you have a potential customer that's shopping around, they're going to go with an option that's going to allow them to get through the onboarding process, meet all the requirements as quickly as possible. And you want to make sure that you're meeting both your risk and compliance requirements and supporting those customers in that way. An area that I'll also call out that often is overlooked when you're thinking about increased conversion and that product experience is what's your input data like? Consider the different attributes you're collecting or gathering about each of your business customers. Things like business name, address, tax ID. What's your own data quality and what's your own exception rate? And how does that feed into the different solutions that you're working with to reach that set of approved status when you're thinking about automation? So we've talked about efficiency, we've talked about conversion, and now we'll go into another area that I think is going to be very near and dear to many of us here on this webinar today, and I think that's decreasing risk. And so this is going to be a bit more of a broad category than the prior two that I chatted through. But really, it's thinking about what are some of the different ways that you can implement these solutions to build automated onboarding. And so we've talked about starting with that foundational picture of KYB. What else? Debra spoke about some of the sanctions implications as well. And so there are multiple different ways to think about how to best leverage a solution. And I'm going to cover a few. So first, consistency, followed by flexibility, and then also how robust is it? And these all feed together. So thinking about consistency, when you're automating, one benefit that you have is thinking through how can you have consistent auditable results, especially in risk and compliance. That's something you want to be able to see. What is the audit trail? How do we get here? I know myself personally, in my earlier days when I was working in investigations, I really wanted to understand how did we get to this decision? And automated solutions actually really help you to do so because you're eliminating some of the manual aspects that may be prone to more human error. And so that consistency is key. Another thing I'd also say to encourage each of you to consider when looking at automated solution is that flexibility. How can you tailor the different rule sets that you have to match your own customer, your own risk tolerance, as well as the different customers you serve, the products that you offer, and really have that best fit to your program itself. Last and not least, what other products or features may you want to implement on top of that verified data? So considerations like you know that this business is registered, is an active business. What else might you want to know? What are other indicators that there might be something fishy going on that requires additional diligence or might require you to take a closer look or ask for additional information? So these things can include things like sanction screening, understanding the industry, understanding more information about like business operations itself. And so this will really feed into that overall picture of who your business customers are, but can be done in an automated, fast, friendly way. Reflecting on this, the three things I would say to set up your questions are increased efficiency, increased conversion, and decreased risk. And thinking through how does this best fit to what you're looking to build into your own KYC and KYB programs. For me, thinking about it, for fintechs especially that may rely on onboarding businesses as fast as possible, Middesk and Socure are a great plug-and-play solution because we fit in each of these areas and we can help leverage our expertise to help you implement those AML KYC checks. All right, we've talked about what to look for, but what are some common mistakes and potential trapdoors, and how do you avoid them? I know this is already quite a dense presentation for us today, so I won't necessarily go quite as deep as I had in previous slides, but when I think about some of those gotchas, some of these things here really come to mind. This first one might actually be surprising, since we've been talking about how to get to approved, how to get through this quickly. But what about when something fails or when something isn't found? Sometimes you may have potential options that have both KYC and KYB, but really are more focused on the KYC aspect of it and not necessarily the business side of things. And so when you're thinking about a solution, how do you ensure that you're both checking to see that the business information has been verified, in addition to the beneficial owners and individuals tied to an account? So that's something to consider as well. How do these things fit together and build that robust picture across the business entity and individuals associated with it? Secondly, and back to one of my favorite themes that I've been spending quite a bit of time around, is around data. How granular is the data that you're using? And more importantly, is it the right information that you're getting to build that customer profile? So for instance, are you getting dozens of responses back when you pass through business information, or are you getting the single right business that you can trust to automate? And so that's one that I think is easy to overlook, because if you receive dozens of responses back that then require manual review, that brings us back to the point I mentioned earlier on maybe not quite so much increasing efficiency and adding time to the completion process, because you then have a narrowed set of results that you need to then look at to say which is the perfect one, rather than having this is the business that I'm considering opening an account with and moving forward with. And again, the time piece. Make sure that the process isn't too slow. Things are moving much faster than they were, and you can make things as close to instant as possible, but make sure to spend some time thinking through what is that end-to-end timing like. Consider what are you aiming for and how fast can you get to that completion, and where are the points where you might still have those manual processes, and is that something that you can revisit or consider to best match the program that you are building. It's been quite a bit of information, and I'm sure you must be asking, we've chatted through different considerations when selecting a solution for your program, some common mistakes and trapdoors to also bake into that. But what are some best practices, and how do you think about actually implementing all of this? Before diving in, I'll also say that as much as I can share my experience and expertise with each of you, you are the different policy and program owners out there. And so this is really going to have to be tailored to your own kind of risk profile, risk tolerance, and the programs that you're seeing from the customers that you're working with, the products that you're offering. But what we can share here today is that foundation off of which you can start to build and give you pointers in different directions. So to that point, I'll start with a foundational set of data attributes. I said data quite a few times in this conversation, and so you must be asking, okay, Dani, what pieces of that data? For me, it really comes down to thinking about name, tax ID, and business address when you're thinking about opening a commercial or business entity account. I'm intentionally not mentioning beneficial owners here at the moment, since we'll touch on that in a little bit later. But when I think about this, starts to build the picture of who this business is and gives you the information and answers questions like, is this a registered business? Does this have a valid tax ID? Where are they operating? But the next question, which if I were in your shoes, I probably would be asking myself, would be, do I need to verify all of these? How should I think about them? What are the different ways that I can actually set up the different rule sets when implementing a solution? You're in luck, because we have some things to share with you. So again, we can't necessarily prescribe or say that this is the path to go down for each of you individually, but drawing on Middesk experience and expertise, here are some various rule sets that we have seen in play. And I think the couple of messages that I want you to take away, since I won't go through these one by one, is how you should think about tailoring each of these to address your individual risk tolerance, the profiles you're seeing, and the different target rates target approval rates that you're looking for. I will give you some metrics since I know I mentioned earlier. Ask the questions, and here what I can say is for the rule sets on the slide, you can see anything from approval rates, ranging from, let's say, the high 50s up to even about 90% approval range. I think that really varies on things that I mentioned earlier, like what's the data that you're collecting? How are you passing it through? What does approval look like for you? In terms of average, or what we kind of encourage folks to aim for based off of what we've seen, it's really a 60 to 70% approval rate is a great range to be in. But of course, if you can get a higher approval rate while building your business customer picture, absolutely go there. And then there's much more that you can build on top of that to understand who are you working with and who's this business, which is definitely something that we can get further into, which I'll actually dive into right now. So we started with those foundational elements. What else? Those really give you a starting point to say, who is this business? What might they be doing? What activities should I be expecting to see on their customer accounts? But there's so much more that you can do on top of that. And so this really touches on the point 3 that I mentioned earlier. And I know we only have an hour today, so I don't want to necessarily go super deep into each of these areas, but I can touch on a few ones that immediately come to mind when I think about how do I develop this risk profile and understand who a business is. And next up, I really think about industry. What industry is this business customer operating in? And there's 2 different cuts to this. I think one is just, am I classifying the business correctly? Do I know what industry they're operating in? From the first perspective, which has multiple different use cases. But I think there's also this kind of risk prevention and mitigation aspect of prohibited customers. When understanding who your business customers are and what industries they're operating in, there may just be some industries you don't work with because of their higher risk, or there could be a potential sanctions nexus. So all of these indications are helpful for you to think through. Do you need to get to a rejection state? Do you need to trigger enhanced due diligence or additional monitoring on your end? And that type of industry classification is really helpful in helping you build that overall picture. What also helps in this is business website, If you're thinking about how does a business operate, especially in a non-face-to-face environment, especially as we're going digital and online, business website gives you really helpful signal into what to expect. What does normal activity look like? How are you expecting your different customers to be using the different products that you're offering? And even how should you think about setting up different rules to trigger things like anomalous activity for that investigation? Earlier, we touched on why is this so important, and really knowing like what, I guess, quote, good or normal looks like, or at least being able to understand what to investigate further is going to be really helpful in building your customer risk profile. Another one that often gets overlooked, and I know we've been talking about the different onboarding processes, so the risk prevention and mitigation understanding at the front end, but I'll quickly touch on an ongoing basis, monitoring of who your business customers are. So here I've mentioned things like address verification and history. So not only do you want to understand, is a business registered upon signing up and opening an account with you, it's also thinking through what changes. Do officers frequently change? Do addresses change? Is this in line with that type of business? And so this feeds into building that comprehensive understanding of who you're working with and maybe what you might need to investigate further, or maybe just ask for a little bit more information. So you're really thinking about automating things quickly and moving and creating that frictionless experience for some customers, but really identifying the folks that you need to dive in deeper with. I'm going to hold on ultimate beneficial ownership, since I think we'll touch on that in a minute, and skip down over to liens. We've had very much an AML KYC perspective today, but there's other pieces of understanding business risk that call into play. And so if you think about creditworthiness, understanding if there's a lien or a judgment on a business is also really helpful signal, even from a sense of, is this a legitimate business? Do they have a lien out there? What's their creditworthiness? Is there a creditor in line in front of you? Which is especially important if you're doing something like underwriting a loan. And so there are multiple different things that you can consider when building this comprehensive kind of risk profile and understanding of who your business customers are. And these are really starting points that we'd encourage you to dive into, evaluate where you are, and think through what you might want to implement as part of the automated KYC and KYB. And I know there's one bullet point here that I haven't touched on that I'm sure is very much top of mind for all of you in the audience. So I will turn this back over to Debra to chat through how this all fits together with KYC and other different considerations such as beneficial ownership.
Thank you so much, Dani. And I think you did a great job of laying out really how do you think about this from an onboarding perspective and develop that relationship and understand that risk, because we've got two pieces to this puzzle, right? The first is, does that entity exist? Does this person exist? And then secondly, do they present a material risk to your organization? So I think those are some of the things we have to think about. So as we wrap up, you think about KYC, you're going to look at your CIP or your customer information program and collecting information on that ultimate beneficial owner. Our standards are you have to collect name, address, social security number, date of birth, or name, address, ID number, date of birth, if it's a non-US entity. But then the question you have to answer is how many of those data elements do we need to verify to consider that this is an acceptable risk to your organization? Those are all policy questions that you have to address, and how you integrate those is going to be very, very important to make sure that you align policy with the way that you handle your procedure. So when you're doing your KYC reviews and looking at that ultimate beneficial ownership, I think you're going to treat much the way you do your CIP if you were onboarding an individual. But now you need to tie that information back to the business entity, right? Relationships and understanding the relationships is really important in this dynamic, and how we link those records together, right? That master data management, entity resolution capabilities, how do we prove those relationships? Those are all critical in how you bring together, how do we do KYB and bring it with a KYC and the beneficial ownership. Those clear ownership structures should be defined, automated where you can, and I like Dani's comments about automation. It takes a lot of subjectivity out of the process and gives you a starting point to be able to baseline and move forward, minimizes some of our reviews and our manual process, and I think that those are super important. I think how you household within your own internal data sets is certainly something you have to consider. Again, how do we tie together the beneficial ownership with the business entity and be able to monitor those risks independently but together? We talked a lot about customer onboarding, that data collection and forms that automate the process. That's the front end of what we're doing, but then how is that risk translated, right, as you go through your monitoring and that relationship within your own organization? Those are critical things to be able to ask actually as you set up your entire program. And audit and change control processes that support your definition and policies are also things you have to take a look at. Again, we add a lot of complexity when we start talking about onboarding consumers. Pretty straightforward. We've got 4 pieces of information, but now we have to add a lot of complexity to this. So these are just some of the things to think about as you're building out your program, as you're making sure that you're ready for any kind of regulatory exam or impetus you might have. And you also have to keep in mind that there is some changing regulatory expectation. There was just some guidance that came out that talked about how they're emphasizing some of the cash-based activity and focusing more on crypto type activity. So all of those things that are happening in the regulatory environment really need to be built into how you determine if you're going to accept the risk and how you onboard those particular customers. So I think the good news is that by leveraging what Middesk can do with their KYB solution, leveraging what Socure can do, right, with the KYC solution, and being able to create that clear automation, and then opening and going into that complexity of how we risk rate and how we take the next step to do enhanced due diligence on these particular entities will help you move forward successfully in your overall program. So with that, do we want to move forward, Matt, to the next section? So let's talk a little bit about what some of those benefits are. As I alluded to, we've got comprehensive due diligence that's required here. By understanding what is that entity real? Is the identity real? Are these two related? And doing that in a more automated fashion, it can give you some comprehensive due diligence capabilities that will allow you, again, that kind of consistency and efficiency that Dani talked about. We can also look at, quite honestly, synthetic is a big problem these days, especially in things like DDA accounts. And so understanding not only do we have a good identity, what is the risk of that identity and what kind of risk exposure from a fraud perspective am I exposed to? increasing those conversion rates is certainly something that I think that together between Middesk is something we can effectively do. And finally, being able to do streamlined vendor management by having one point of contact, giving you access to 2 solutions is a big part of what we can bring to the table. Anything to add there, Dani, or Matt?
Definitely did a great job laying all that out. I don't have too much more to add, but I can say that all of the different considerations that I walked through, it's definitely coming to mind as we think through what this partnership can bring for each of you.
Perfect.
Great.
All
Well,
right.
at this point then, we can go ahead and address some questions. We've had some come in. If there are additional questions right now, or if you think of any while the Q&A is going on, again, that chat box, or question box, I should say, on the side of your screen is where you can enter them, and they'll come right to me, and we'll get as many of those answered as possible in the time we have remaining. So we'll go ahead and start going through a few of these. First question that came in, this one I think we'll direct over to Dani. Which types of companies need to implement KYB?
Sure. That's a great question. I'll focus on the US answer and harken back to something that Debra mentioned earlier. So if I think through like different KYB processes, they're currently regulated by FinCEN, and in particular, thinking through the CD final rule. So in short, there's a few different categories of companies that should consider implementing KYB. So those that have strict regulatory requirements to do so, thinking through like banks, financial institutions, mutual funds, securities brokers, et cetera. But you also have a whole number of additional companies that should consider implementing KYB through contractual obligations, or really just understanding who your businesses are on the other end and setting up how do you mitigate the risk that you have. So there's regulatory requirements, there's contractual, and then there's also just understanding the business going on your platform and how you want to mitigate that, even if there is not necessarily a strict regulatory or pass-through requirement there. Debra, anything you'd want to add to that?
Yeah, I completely agree, Dani. I think that's a good way to sum it up. And I think you think about vendor risk also, right? Third-party risk as another facet, because as you're working hard to build a business and to be able to make sure that you're protecting your customers, you want to make sure that you're doing business with the right entities as well and not exposing yourself to undue risk. So I think there's another dimension to KYB beyond just the regulatory side that you talked about.
Great. Next question. In the case where we don't have a clear path to the UBOs and there are corporate structures in between, how do we deal with that?
Yeah, that one's challenging. So it's a little bit like peeling back an onion. So you have to start at the top and keep working your way down. That is something probably that will fall outside of automation. You can pull those things into automation to be able to do the first level, but then understanding and collecting the information is the challenge, right? So I've got multiple corporate entities, likely with multiple owners. Again, it creates a diagram that says, okay, here's my top level, here's the corporations that own those underlying levels, and here's ownership of those corporations. You have to keep drilling down. That's where we get very complex structures. Those are the situations in which we get very concerned about things like money laundering and obfuscation of funds. Depends on who you ask. The IRS calls that tax evasion in progress, right? Being able to hide those assets and be able to understand who actually is controlling the game. I can't tell you there's an easy path to that. Unless you found a magic bullet that I don't know about, please share if you have.
I can add a bit more to that as well. As I think through that, it's definitely that level of complexity and how do you understand those different layers, and you mentioned the challenges with automation, really thinking through what data set is out there and how do you understand those linkages, the relationship, and where do you go to find the information to see who are the like entities underneath all of those. Definitely come to mind as well.
All right, as we're looking at difficult cases, here's another one. This one concerns sole proprietors whose businesses are not registered with any Secretary of State. What is needed to verify them and their risk profile automatically?
Yeah, I think that's a good question. A sole proprietor, you have to treat as an individual, right? So you're going to perform KYC or CIP processes on that individual. You're going to treat them as an individual entity, even though they are representing as a business. So while there may not be a registered business entity, you still want to check, obviously, but you definitely need to collect the name, address, identification number, and date of birth and verify that for the individual. You're going to probably create a structure that says, here's the business, right, or their DBA that they're doing business as for the business entity, but then definitely tie in that KYC portion. And you're going to have to rely pretty heavily on the KYC with that one.
Great feedback there on that. If there are other questions, again, please enter them in the question box and we'll be sure to get to them. Our next question is, what is LOS or account opening integration partners that you may have in place for KYB?
Happily to mention Middesk right here is an awesome option forward for thinking through how to solve for KYB.
Yeah.
Are there additional integrations that you through a Middesk that you can mention, Dani? Or
that's a great question, and why don't we follow up with more information for the rest? But happy to answer any questions about what Middesk can offer.
Okay.
Sure.
Sounds good. I think on the Socure side, we do have some integrations with some core platforms that we can work through, but I think some of those origination systems are definitely things we've tried to make easy. And I think for both Socure and Middesk, we've tried to create really simple and clean APIs so that we can facilitate those kind of integrations. Even if we're not integrated, we try and make sure that we take the easy path for that.
Great. And it looks like we have another question just came in. Will the KYB process also validate or confirm the business EIN?
Yes. Earlier, and speaking through the different kind of data attributes to consider, one of the pieces that I chatted through was tax ID, which can include the EIN. In terms of how that fits in to your overall program, I think it depends on how you're thinking about your own risk tolerance and how you set up the different rule sets that you have. That's definitely something that we note to include in building that KYB program out.
Great. All right, I believe at this time that is all of the questions. If there are additional questions that you think of after this session is over, we'd be happy to answer to those. You'll be receiving an email that'll come out at the end of this presentation, which there will be a recording of today's presentation. That was a question. We will have a recording of this presentation sent out so that you can review it later or pass it on to any colleagues that may be interested in reviewing it. And at that time, you'll also be able to send in any other questions, or if you'd like to receive more information on our partnership with Middesk or any of Socure or Middesk solutions, we'd be happy to assist you with that as well. So at this point, I'd like to thank everyone for attending on behalf of Deb and Dani this afternoon. Appreciate your attendance and your participation, and we hope you have a great rest of the day.